Our next guest warns the market is in danger of giving back July's big gains. Malcolm Etheridge is Executive Vice President at CIC Wealth. Malcolm, thank you so much for joining us here today. So why do you think investors should not get too comfortable about the gains that we've seen? You think a recession is on the horizon if we're not maybe already in one?
Yeah, so I've been firmly in the we're already in a recession and just, refuse to admit it camp since probably about April. But I was certainly also in the camp expecting this earnings season to be a bit more downbeat, with some bigger misses on revenues and earnings across the board. So it's not all that surprising to me to see markets react so positively to earnings reports that are like less than terrible, right? I didn't hear any real projections of layoffs or staff being reduced, just maybe some freezes, and that's really just financial pragmatism more than anything else. But I do actually expect that we'll start to get some analyst revisions toward the end of earnings season that are going to be less than positive. That could be that thing that kind of cools off the excitement that bubbled up to the surface a little bit all throughout July that we're now talking about.
So earnings less than terrible, but a little worried about being able to hold on to these gains here in July. Tomorrow, we were just talking about how we're going to get this July jobs report, and we're not really sure what to make of it when it comes. If it's strong, is it good? Is it bad? How are you going to be advising clients or trading your own book around this number? What are you hoping for?
Yeah, so I think like all of the guests have already said, I'm at least hoping for a number that's not stronger than 372. Right, because it tells us the Fed is likely to get even more hawkish than we're hoping they will be. We're really hoping that we're going to be going in the opposite direction. I don't know how realistic 258 that estimate is, but if it's got a two handle, maybe it does say to the Fed, like, toward the end of this year, they're not going to need to intervene at the levels that they have so far this year. And maybe that spells good news for the markets at least next year, because if they do have to remain hawkish and, like Bonawyn was talking about, basically kill all the doves that are still out there, that spells bad news longer term than we're really expecting or than the markets seem to be expecting. And so at least, a jobs number somewhere with a two handle, unemployment rate somewhere around 3.5 that we've already come to expect, at least tells us, we don't have to make any changes to what we're expecting right now.
Malcolm, it's Karen. Thanks for being on. So we talked last week when Powell was on about this interpretation of the pivot, and I think all of us on the desk really didn't agree with that. They sent out an army of hawks that has been talking all week, hawkish, Mester today particularly hawkish. So do you think that the market believes the Fed will be hawkish, or do you think they think they'll be dovish come beginning of 23?
I don't. I think the market is responding exactly as if the Fed came out and said 75 basis point hikes are now off the table for the remainder of the year. Even so, if we see August turn out similar to the way July, I have to assume that there's a lot of folks in there who are expecting they're actually going to start to see some cuts next year, which I've heard projected from some folks, and I just don't think is realistic just yet, because there's so many unknowns until the Fed comes out again in September and makes a projection. But if we get a CPI number that has come down considerably from a 9 handle to maybe like a 6 or 7, I think Guy said, then maybe that does say to the Fed, like, hey, take your foot off the gas a little bit. You can hang out here and not have to intervene so much. Maybe we're talking 25 basis points, but I just don't know how likely that is to happen when, as you guys just discussed, housing is such a large impact on that CPI number, and we haven't really done very much to address the housing supply problem, which brings down that OER number because it also gets folks who have been renting and want to buy into the camp of now bought, bringing down what it costs to actually rent an apartment. And so until we address the housing supply problem that we have that leads to everything you guys just got done talking about, I just don't see how CPI comes down to a point that says to anybody that you can expect the Fed to start to become dovish.
The supply of homes definitely a key problem that we're nowhere close to solving. Before we let you go, I want to get your top pick. This is not a value name. This is a growth name, but you're liking Microsoft. Why do you like this one?
Yeah, so I actually added to my Microsoft position personally last week, right after we got their earnings print. And essentially it's because I was, again, going into the earnings call expecting Microsoft to say, we missed earnings by X amount because consumer demand wasn't what we projected it to be. And instead, they basically said, we expect to do more of the same. We expect, we basically reiterate our earnings projection that we had 3 months ago, and we expect the next fiscal year, the next 4 quarters, to see something like $100 billion in cloud revenue that's already on the books. I have to imagine if they're projecting it out. And so to me, Microsoft being as big and impactful as they are, saying basically we reiterate the same guidance we had 3 months ago at a time when the market is supposed to be kind of soft, tells me what we're likely to see, in the next 6 to 12 months from some of these larger mega cap tech names.
Wow, well, Microsoft up about 10% since they reported, so good job on your timing there. Malcolm, thank you very much for joining us here. I'm going to give the final word to Bonawyn on this one. What do you make of either Microsoft or any of the broader points that Malcolm brought up there about the housing market?
I thought he made a ton of super salient points, particularly like the cloud computing business of Microsoft. I think that is an area of strength, and I don't blame him for doubling down on the position.